Now, Berkshire Hathaway may report its best quarter in at least 2 years on Friday. The company's stock portfolio is valued at more than $60 billion. Let's go to Bloomberg's Zara Burton in New York for a closer look at that. Zara, so Berkshire back on form, maybe?
Well, maybe, because remember, it had its first loss in more than 7 years in the first quarter, and that was partly because it made some bad bets in the direction of global stock markets with derivatives. But because of the rally that we saw in stocks since the March low, that's expected to reverse course. Berkshire expected to report net income of about $1.9 billion in the second quarter. Still a decline from last year, but a much better picture compared to the first quarter. If you look at some of Berkshire's stock holdings, you can see why the earnings picture is expected to improve. Just look at American Express. That stock up about 71% in the second quarter. Wells Fargo as well, soaring about 70%. Goldman Sachs Group rose 39%. Burlington Northern Santa Fe up by 22%. So huge moves up. Now, Berkshire's own stock, that rose about 3.8% in the second quarter. You can see year to date it's up about 11%. It reached 100,000 this week. That's the highest we've seen since January. Now, it's still 28% off its record closing, though about $149,000 a share. That was reached back in 2007. Quite a move.
Yes, quite something. What about the underlying businesses that Berkshire owns, though?
Oh, yeah, they definitely have a number of different businesses. We have home building, jewelry stores, jet leasing, disaster insurance. And Buffett himself has said that Berkshire's energy business and car insurer Geico, they're thriving amid this recession. Jewelry, though, not doing so well. Home building not doing so well, which is for the obvious reason. And then airplane units have suffered as well. You have NetJets, that's a private jet business. A lot of corporations cutting back on the use of these jets. And, of course, the ones that can afford them not really wanting to afford them, especially if they are in fact bailout candidates from government money.
And at the same time, we're seeing private equity firms, which of course had a disastrous year, much worse than ordinary companies, but they've been returning to profit.
That's exactly right, because it was a terrible time to be a money manager last year, especially when the direction was up for such a long time that the plunge that we saw in stocks was really a downer for a lot of these investors in private equity firms. Now, the return, again, of the stronger equity market certainly helping out Blackstone Group, which is run by Stephen Schwarzman. It had its first profit in a year. Blackstone able to mark up its private equity holdings by about 3% after they marked them down by the same amount in the first quarter. The firm, though, still had to mark down its real estate holdings by 19% in the second quarter. That may have something to do with the sheer sell-off today. It went down about 6%. But even though you saw the stock sell off in the today's trading, it really has doubled so far this year. And if you look at another buyout firm, Fortress Investment Group, just look at the run-up in this stock. I mean, 400% to the upside. They were up about 5% today. They reported second quarter earnings that beat estimates. Profit bolstered by a 17% jump in assets under management during that period, Paul.
Yeah, as always with these, you've got to get in really early. I mean, when you look at Blackstone, it's up 114%, as you say, year to date. But in the last 3 months, only 12%. All of that gain was in the first few weeks. So got to be quick as these private equity guys are. Thank you very much for that. Zara Burton there in New York. Now, about